G'day expats, welcome to another episode of Expat Chat. Today, episode 72, and as always, joined by my friend, colleague, business partner, mentor, Brett Evans, who is the Managing Director for the EMEA region. G'day Brett, how you going in the sandpit over there?
G'day, mate. Happy New Year. Happy 2023. Happy Year of the Rabbit.
I know, mate, we're into it. It's almost the end of the January, to be honest.
I know.
It's remarkable how quick the start of the year goes, and before you know it, you're already after June, and then you're talking about tax and a financial year, all those sort of things. 2023, it's shaping up to be an interesting year, but I think all in all, I think it'll be a bit of a year of recovery for most, I guess, markets, but definitely an interesting year. I think a lot of what we'll discuss about today will probably be around the economy and where we're heading, and some exciting updates from Atlas Wealth Group as well.
It is, mate. It is. So let's kick it off. Let's get the homework out of the way. All the information that
Yes.
you're about to hear, see, imbibe, infuse should be taken as informational, educational purposes only. Please do not construe this as personal advice. If you have any personal advice requests, please get in contact with Atlas.
Absolutely, mate. Now let's jump into it. We're obviously already in to 2023 very quickly. It's already gone. I mean, share markets since the start of I suppose January, they've all lifted around the world, whether that's some
Yeah.
renewed confidence, thinking, okay, well, 2022 was a horrible year for investors. No one could really pick the asset class to invest in, let's be honest. But now this year, it's shaping up to be very different. Markets should have a bit of a slow recovery, which will be good to see. But a lot of eyes are all poised on that sort of keyword recession, whether recession is going to happen in the US, Australia. I think recession's probably happening in some countries around the world. I think that's pretty obvious. But whether this year is going to be slow year of growth or whether there could be some upsets, some good things, some bad things, it's definitely going to be interesting.
Mate, it is. And I think a lot of folks, getting back from the Christmas break, they're saying, okay,
Mm,
what's the go? Where are we going? And
mhm.
Christmas, between Christmas and New Year's, normally we sort of get a bit of a lift. It didn't happen, but
No,
come the 2nd and 3rd of January, it kicked on and has held up pretty well. And that's been pretty
it
much
has.
driven by the US inflation numbers not being
Hmm.
as bad as people were fearing. So things are
Yep,
tapering. And obviously the rate cycle in the US does look like it might slow down, which is what the market wants to see. The last thing we
that's
want to
right.
see is rampant inflation blazing away,
Hmm.
massive, interest rate rises and the handbrake coming up on the economy. So it's given investors renewed hope. The other difference of this time this year versus this time last year is this time last year, there was so much uncertainty. We had Russian
Yeah.
troops on the border of Ukraine. We had
Yep.
record low interest rates with the lay down misere fact that rates are going to rise. So,
Hmm.
but how much, by how much, are the economies going to fall over? We've
Hmm.
now got the benefit of hindsight. We've now rolled into 2023. We know what's going on in Ukraine. That's been priced in. We know
Yep.
that every country has lifted their rates apart from China. That's priced in. And we now
Hmm.
have almost 6 months worth of chronological data to show how the market's reacting to these rate rises. So
Hmm.
I got to say, I'm a lot more positive on 2023 than 2022. And I just think because the market can go up in adverse situations, it
Hmm.
just doesn't like surprises. It doesn't like the
That's right.
unknown. And when you've got guys like your mate Jerome Powell, JP, talking
Hmm.
doom and gloom, Phil Lowe talking doom and gloom, the market does take a bit of umbrage in that and does get concerned by that. Whereas now
Hmm.
it's like, we're good. The rates have started to
Yeah.
rise. We know the end is in sight. We know this is
Hmm.
not going to be another 12 months worth of rate rising. And we can price that in. Now,
Hmm.
companies, they're running relatively low debt on their balance sheets. Their biggest drama right now is headcount and finding bums on seats, unless you're in tech, when in that fact that, they're actually
Oh, yeah.
backing people. But apart from tech, all other sectors are doing bloody well.
Yeah, that's right. I mean, you look at a lot of the data that will come out of the US very soon because we're obviously just about to head through earnings season or reporting season. But data from even last year, especially it's something I talked about before, but the September quarter and data from October, November, still painting a really good rosy assessment of the average US consumer, healthy balance sheet for small to large businesses in the United States. You had really solid GDP growth in the September quarter, and I guarantee we'll see the same type of solid growth for the December quarter. And at the same time, you've got their inflation tracking down, and there is a really strong trend line that you can draw from June last year when it peaked to now. And then, I suppose comparatively, you look at Australia, our November figure got posted and it was a little bit more than October. But since then, obviously, there's been a few rate decisions. We've had obviously November rate decision. We've had December's rate decision. We know the flow-on effect and the lag is always 2 to 3 months. So when the RBA meets next month, early Feb, it's actually using up-to-date data to make that decision. I really do believe we are very close to being at the end of our, I suppose, tightening cycle. I think the market's pricing in 4% cash rate. I think that's very aggressive. I think probably finished 3.35, maybe 3.5. So we're almost there. And there's talk already of central banks having to bring down cash rates towards the end of the year, just so it's a bit of a soft landing for those economies as well. The US economy, really interesting one right now when you've got very healthy, I suppose, consumers, healthy businesses, you've got inflation tracking down. We know that there's probably going to be 1 or 2 more cash rate decisions, whether they're going to have a very mild recession or escape recession just, I think that's very likely. We've seen probably a few rolling recessions through the Eurozone, some countries there, the UK. I don't think that'll be something that's over, in the next couple of months. I think that's something that'll probably tack in and maybe wound up towards the end of maybe the third quarter this year, maybe October, September, those sort of times. But this year, everything's priced in. There's not really something that could really spook share markets. And then I guess we can look at property markets as well. Property markets, that negative correlation that they have with interest rates going up, property market pulls back. That's all the rage at the moment back in Australia. You can't really read a newspaper without at least 20 articles being thrown in your face about it.
It's going to be interesting to see, it's the mortgage cliff. I think the one that everyone's worried about.
That's right, yeah.
To me, it's not going to be everyone who's going from 2% to 6 or 5 is going to suffer. The question is how many, what quantum of that number of people that are resetting. I think I heard a number the other day, it's like 43% of mortgages are resetting. So it's a big number. And people out there are likening it to the old ninja loans for GFC and that sort of stuff. Where it's different is COVID has sort of saved a lot of people in terms of building up their cash buffer because they couldn't do anything for 2 years. But the question is it's not just the reset of the mortgages. It's that combined with rising energy costs, rising consumer staples, going to the supermarket, how that plans out. So I don't think we're going to get a real true picture of the Australian consumer until probably Q3, definitely Q4. We'll have a better idea. And then at that point, then we'll be able to see what's going on in the property market. I still think it's too early to call. I don't think what we've seen in the last 12 months is a true reflection of what's going on behind the doors of the McMansions and people's houses. I think it's going to be interesting. I mean, people have been holding on pretty well. They're still, if you look at the GDP numbers, there's a great chart there. One of my favorite charts is contributors to GDP growth in Australia. And it's not mining investment. It's not business investment. It's not government, and it's not exports. It's consumer consumption. The consumer, it's all consumer. It's all everyone spending $20 on a latte.
I'm laughing, Brett, because the chart pack you're talking about, I think I read it about an hour ago from the ABS and the RBA. But you're right, consumption was on fire for that quarter. And that just goes to show you've got you look at our economy. You've got a record low unemployment rate, 3.5%, hasn't been done in 15 years. Probably not sustainable because we know that most countries will always have a degree of unemployment. The same with the US. I think because this year things will slow down from a growth perspective when you look at the economies, it does mean unemployment rate will probably track back up a little bit. But I agree. It's funny. I was talking to a buyer's agent last week, and I always like to get a few different people's thoughts on the property market, and they'll talk about that's right. And he's like, listen, I think he's saying, listen, the market's going to slow right down, but it really depends on sort of your types of property markets. He's like,
100%.
the people that are going to feel it the most are those that are, their property's worth 500 to maybe $1 million. He's like, those that have gone out and bought a property worth 2.5, 3 million plus. Well, those are the types of buyers that probably aren't going to be impacted too much whether interest rates go up or not, because they've got their household, which is either on really good income, or they've just got that wealth that can support those kind of high-end purchases. But he's really talking about the mum and dads, the school teachers, the nurses. He's like, that category of investors or first home buyers. That's right. He's like, that's the belt that's really going to feel it. So you're still going to have some prime suburbs, which will probably slow right down, but they'll still keep carrying on. But then you'll have obviously areas where population growth and I suppose population density is quite high. They're the areas that are really going to feel it. And you said it before, mortgage belts. You look at Brisbane, you look at Sydney, you look at Melbourne, you look at Adelaide. They were all quite dark in terms of mortgage stress last year. Yeah. Yep. So the fact that we'll probably have another one or two more rate decisions in the next coming month does mean that we'll probably see a bit more pain, absolutely, but not until obviously that lag effect. And that again, as you said, that might be a case where the property market bottoms out towards the end of the year. It's really interesting. And then you talk to real estate agents, and I think if you're a real estate agent right now, gosh, you need to be a good one compared to 2021, where you could be in the industry for 2 months and sell anything. Yeah, that's right. So I think you'll have a lot of real estate agents leaving the industry very quickly. But you hear them and they're just like, oh no, the opportunities are still there, the capital growth is still there. You've just got to be the ones that find it's like, gosh, okay, you guys haven't really seen the writing on the wall yet. So it's really interesting to see opposite sides of the track, what they're all thinking. But naturally, a bit of a slowdown in the Australian property market this year. Normal, taking back those gains from obviously 2020 and 2021. That's all very normal through a tightening cycle. Not the end of the world. Probably has to happen just to hit a bit of a recalibration, reset in the property market.
Yeah, to me, I think by February we'll have a better idea of what's going on there. When we look at sort of mortgage defaults and bad debts and that sort of stuff. But man, I think we've run on to the other housekeeping items. For today's call. First of all, congratulations on the new office. So folks out there, the reason why James has got a blurry background is because it's like moving house. It is never a good experience moving offices. But we'll put some images up on the socials when it's all tidied up and looking fresh. But it's exciting. Yeah.
It is, mate. We relocated, so we were in sort of the central business district in Southport and Southport Central, where all the main towers are. We've now moved a little bit south to Surfers Paradise. We're very lucky. We've got a really good view of the beach now and overlooking the ocean. And I think the team in the Gold Coast office, we're all very excited for when the whales come through, because we will be able to see them. So can't wait to
more space for growth.
More space, more offices for greater headcount, and right now we've got about 40 different flat packs which we need to assemble. So we're working through those, and a few of them are from IKEA, and you look at those funny pages from IKEA where it's one or two guys and arms are up going, how do we do this? That's us right now. So it's been testing, but I would say moving an office logistically is a lot harder than moving a house because of all the technology that goes into an office. So
you've got to move data ports and switching panels and data cabinets and then make sure everything's all locked up and synced up and So
my goal for the office come 1st of February, we're done. We're good. We're up and running. We're set. Shoot off some photos. Let everyone know, and any expats that are in the town, feel free to drop in, say hello.
Definitely. And mate, last of all, Atlas Tax made the big announcement yesterday. So it's been a work in progress. You and I've been talking to Ben for quite a long period of time now. Just making sure there's an alignment in values and what we want to deliver for expats. And mate, he's on the same page as us. And, for the last 12 months, we've been putting together a pretty, I think a compelling offering for expats. So do you want to run us through Ben and Atlas Tax?
Yeah, well, I mean, Ben's been doing, I suppose, in the background, tax compliance for a very long time. I'd say close to 20 years, to be honest. And formerly from one of the big four, he's branched off and holds obviously a long interest. He's worked overseas as well, I believe in the United Kingdom for a while, the big four, and it was just a natural fit that we brought him in. He's obviously an expert for non-residents when it comes to taxation rulings, private rulings. Even just seeking advice, I think, around your residency. One thing which everyone has probably heard about if they've been listening to us harp on for the last couple of months is the whole modernising tax residency rules. That's going to cause a huge stir once and if that gets legislated, say in the next 6 to 12 months. And Ben's going to be there to definitely hear questions and ideally provide a bit of a framework of how to deal with it should it be legislated. But it's, I suppose, a bit of a natural cause and effect. A lot of clients, they have complex tax matters, especially when they're either in Australia or they're moving overseas for the first time, the second time, or the third time. So having a go-to taxation service and tax compliance service for that sort of advice, it was just a natural fit and
It's invaluable.
obviously welcome to, yeah, that's right. Welcome to the party, Ben, because I know a lot of clients are excited to use your services. The fact that there's clear synergies there, we just can't wait to see what this year brings.
Look, to me, the fact that we can keep it all in-house and just, an expat's life is bedlam as it is. I know it. I live it. It's crazy. The fact that you have one port of call, just someone who knows you and you don't have to explain things. Here's the problem, just make it go away. Now we have, under what we call the Atlas Wealth Group, Atlas Wealth Management, Atlas Tax, and Atlas Mortgages. We're, from a service offering point of view, there's not much we can't do now for expats, which is fantastic, and all under one roof. And, in terms of, systems and sharing information and not having to pick everything up and move it again every time you want to talk to a different person for a different reason. We're really all about creating a frictionless experience for expats. And mate, I'm pretty proud to say we're getting there.
Yeah, absolutely, mate. It's I can't wait to see, I guess, what this year brings. And I have no doubt, I'm sure there'll be more things coming to Atlas Wealth Group in the next 12 to 18 months, but I think it's going to be a big year. I really want to get an insight into this residency rules because I know it's going to cause a lot of concern, and just having Ben there to field questions, we're definitely going to get him a few of these episodes, Expat Chat, just to see what he's about, get obviously a bit more insight as well. But yes, big year ahead and looking forward to it.
Definitely, man. And I think just as an update to all the listeners and the watchers out there, we hadn't received our response yet from the minister. So as part of a government petition, essentially goes to the petitions committee. They present it to the lower house, the House of Reps, and the minister whose portfolio is part of the petition. So what happens is he then reviews it, responds to it, gives it to the petitions committee, and then passes it back on to us. We haven't got it yet. As soon as we have a response back from the minister, we'll let you know. From what we're hearing in the back channels, Labor's not exactly enamored in what the Libs were proposing, which is good, sort of. We'll have to wait and see what comes out of that. But it doesn't sound like they're just going to pass it through based on all the Border Taxation's recommendations.
That's right.
Obviously, we've got our Christmas list that we handed down before Christmas, 90 days and those 5 exemptions. So any updates we have on that, we'll certainly keep everyone posted. And last of all, what I was just going to do is just, and also on the Atlas Tax side, there's a link down below to more details on Ben and the team. So click on that link if you want to learn more. Mate, last of all, I know I keep saying this, and I know I said I wouldn't say it towards the end of last year, but now that we're new year and I've used up all those tokens for last year, guys, we need more subscriptions, more reviews, more sharing. This year is going to be a tumultuous year when it comes to tax residency rules and markets and, all of the things that, come into the dynamic of being an expat and managing your finances. So, we want to ramp this podcast up. We want more people listening than just our parents. So we would sincerely appreciate it just to really start to give it a nudge, help us do that, because as you know, we do this for free. We give all this information for free. The only thing we ask for you is just a bit of love on the sharing side. So subscribing, sharing, giving us reviews, it helps us get the message out there, because the more the systems see that people, giving reviews and giving scores and subscribing, then they go, oh, okay, wait, this should be shared to a broader audience. And by doing that, you're just going to help your fellow Aussies in a lot of the weird locations that we find folks in on a daily basis.
That's right, mate. That's right. It's going to be a big year. Plenty going on out there. Obviously, Russia, Ukraine, inflation. I think last year, would be called the year of the great inflation. This year, it's going to be probably moderating, or great moderation, maybe, as it all
we could actually combine a phrase. Moderation and inflation, modiflation, or something like that, or
modflation.
You heard it here first. You heard it here first, folks. There you go. When you see this in the press, you got to see us.
Now, I know a few clients were listening last year, and we made a few bets about beers and cartons of beers and those sort of things. I think you know, winning that one actually. Well, you did actually, yeah, that's right.
Yeah.
But I mean, should we be putting any bets on this year? You know, whether it's a bottle of rum or you know, a carton of beer or anything like that. Do we want to call it in terms of the next rate decision, inflation? What are you thinking?
And I'm calling guaranteed late M is there another 225 bips from the RBA,
Yeah, okay,
January and
interesting.
February, March, a
Okay,
pause in April,
yep.
and then no central bank wants to make an interest rate decision around budget time. So I think May's
No.
off. May's off, and then we'll see. So I reckon two rate rises, two pauses. I'll put a
Yep.
bottle of Bundy on that.
Bundy,
But what happens
gosh.
after that is too far away to see.
Yep. Gosh, I love the Bundaberg rum drop. Jesus, we
Yeah,
are
that's it.
Australian shit.
Yeah. I'd have to throw an Aussie one out there. You know, I mean, if I said,
Bloody hell.
you know, beef eaters gin, it doesn't exactly have the same cachet.
That's right. No, I like that. So two more rate rises. I mean, I agree. Two more rate rises. Definitely could be on the cards. I don't know if there'll be 0.25 rate increases though, because there's nothing which governs the RBA to have to do it to make it 0.25 a
No, of course
quarter.
not.
It can be 0.15, it can be 0.1. I reckon we'll stop at 3.5 as the cash rate this year. So that's my
Yeah.
prediction. Yours is another 0.2, 2.25. So that would take us to 3.6, the
3.7.
cash
Yep.
rate.
Yep.
So we'll,
I'll
we'll
tell you
see where
why.
it lands.
I'll tell you why. One of the biggest concerns that the central bank will have is what we call the interest rate differential.
Yep.
So if the US keeps raising rates, the UK keeps
Mm,
raising rates, the ECB keeps raising rates, and Australia
mm.
stops, then what's going to happen is there's going to be an arbitrage opportunity between interest rates in
Yeah,
all the different countries, and that can
that's right.
cause weakness to the Australian dollar. That
Yep.
helps the Australian economy. Right now, the RBA doesn't want to fuel those fires. The
No,
RBA wants the dollar to be around the sort of 70, 75 range.
that's
If
right.
they stop raising rates and the others keep going, then we could
Mm,
see further weakness come into the Australian dollar. So
yep.
I don't think they want to see that. That's why I've made the
You
call.
reckon that? Yep.
One thing I will be happy to put something a bit nicer than a bottle of Bundy on will be there will be no
Hmm.
rate reductions in the next 12 months. That's an easy one.
Not this year. Yeah,
I don't even,
I
I
agree
don't
with
think
that.
early next year. I don't even think next year, to be honest with you. It's, you know, we're just above a neutral cash rate.
Yeah.
We're not expensive anymore.
No,
People,
no, no.
if you've come into the market, you know, with 0.1, yeah, 3% is expensive,
Mm,
but
mm.
3% is neutral.
No,
So we're
that's
only a
right.
little bit above that. So anyway, that's my call. I'm happy to put something nice on for 18 months. We're not going to have a rate
The,
reduction for at least 18 months.
the currency one you mentioned is an interesting topic, to be honest, because I would expect, and I think a lot of people would agree, the US dollar to weaken this year, regardless of a widening gap between our cash rates. And the only reason this is all being talked about is China is
Mm-hmm.
finally getting up and running, and obviously they're well off full capacity, but they're finally putting some coal in those engines and firing
Yep.
back up, because they're moving away from this whole COVID zero policy and they're slowly getting with the times. Um, and then separate to that, you know, China gets up and running. That's good. That's good for our economy. You know, it flows on to us. Good for
Yep.
our exports. Good for our currency as well. And I just feel like this year will be the year which the US will lose that safe haven appeal a little bit. So
Yep.
you'll have the currency traders moving into probably more emerging market currencies.
Yep. I agree with that.
And, and even if there is a widening gap, I couldn't see the US dollar, you know, getting back down to say on our side 65 cents or anything like that. I think we'll definitely flirt with above 70 cents this year.
No, look, I think, you know, you and I need to do a bit of a told you so to the listeners. So was it August, September when we were sitting in the 62s and we
Mm,
said to people,
mm.
stop thinking so much about it. If you like the price,
Oh yeah,
take it.
get some now. Get some now
To
because it'll be
all
gone
those
very quickly.
to all of those who did it, well done. To those who didn't do it and they should have done it, you're a bunch of mugs.
It's true though. I mean, I was having a few consults late last year with a few expats, and they were sitting on a large amount of cash, and they seemed to think that they knew better than most that the US dollar is going to get strong again. I was like, it's not. You've you've lost those
Don't
gains.
fight the market.
I was like, you know, you're coming back in 6 months' time, you want to use that cash to buy a main residence, send it now, or you're going to lose maybe an additional 3 or 4% on the currency gain or currency loss. And,
Yep.
you know, there's an extra 3 or 4% that you can't spend on a house and stamp duty and all those fun things. So,
Exactly.
that's it.
Free
I mean,
stamp
it
duty.
adds,
You just got them free stamp duty. They followed your advice, would have been free stamp duty.
That's right. Well, it just carries so much weight to dollar cost averaging through so many different avenues, whether it's
Yep.
currency, whether it's super contributions, whether it's investment markets.
It's all the same premise.
Exactly right. Yep, absolutely.
So, mate, yeah. So anyway, to those who didn't do it, who should have done it, and to those who did do it, you're a bunch of legends.
That's it. Well done. You've cashed in. You're not sort of, I don't know what the right word is. I think pussyfooting or whatever you want to call it.
Yeah.
But yeah, well done.
Yeah, and look, I think it's a good lesson for a lot of people who didn't do it, who now know what to look for in the future. You know, when you do see these rapid dips, it doesn't mean, unless there's some, endemic problem underlying it, which there wasn't. It was just a pricing differential, risk on, risk off. That's all it was. So not saying Blind Freddy could have seen it, but, you know, we did this on a daily basis so we could see it. And we tried to help everyone out on the call by saying, do it. So you can lead a horse to water, but you can't make a drink. But
that's it.
I think we'll wrap it up there for today. So folks, we just want to get on the airways, say, hey, we're still alive. G'day.
Welcome back to a new year.
Welcome back to the new year. I hope everyone had a great time with the festive season with their families. Hope Santa was kind to you. And we've got a lot planned for the podcast in the coming months. So like and share and review, please, because
that's it.
It's nice to know that more than my mum and dad are watching. So
well, that's it. And I mean,
out there.
As you know, we do this for you guys. There's topics you want us to drill down on, and send it in through that podcast
There's a link
feedback
down below.
link.
Yep, there's a link down below
Absolutely.
as well for that. So jump on there, and also if you want to have a chat, you know, we also have the Australian Expat Financial Forum Facebook group. So that's in the link below as well too. So let's wrap it up there. I'll let you get back to your flat packs and assembling furniture, and we'll talk to you next week.
Sounds good, mate. Thanks for your time. Cheers, Brett.
Thanks, mate. Take care.